Hello everybody, welcome to this video on ID generation using scans, the scan engine on StockCharts.com. And as I'm presenting, you won't be surprised that we'll throw in a little bit of RRG or relative rotation graphs. Now, one of the most asked questions that I have gotten in the last few years is whether it was possible to use the scan engine to scan for certain actions on the RRG plot. Unfortunately, that is not possible yet, I'm going to say, because I'm sure we're going to fix that in the future. But at the moment, we cannot. Does that make RRG unusable in combination with scan? Not at all, because I use scan quite a lot to find stocks to fill an RRG. So that's what I'm going to try and share with you in this video today. The normal procedure, I think, is people scan and then they chart. So you have a bunch of rules, you scan for it, and then you're going to look at the charts. What I do is I have some rules, I scan, I throw the result at an RRG, and then I chart the security based on what I see on an RRG. So it's a slight subtle difference. Now, I'm going to go over 3 examples on how I use scans in combination with RRG. 2 examples are scans that are looking for trend ending, trend reversing signals and plotting the result on an RRG. Because as you know, RRG is really a trend following, a relative trend following visualization. And what I like to do is to marry the trend ending characteristics of my scan with the trend following characteristics of RRG and see if I can find things that align and give me early entry opportunities. And the 3rd example is to show you how I use scan to find members of a universe or groups or sectors that I can plot on an RRG. Let's move to the first section, to the first scan that I want to share with you. This one is actually a very easy scan. What I'm doing is scanning for low RSI values. You can apply that to a lot of indicators. I just use the RSI to give you an example. So what I'm looking for is for stocks that have sold off, but they seem to be stabilizing recently. So what we're going to look for is an RSI value below 30. And I also want the current RSI value to be higher than the RSI value of N days ago. And of course, you have a little bit of variety that you can bring into your own taste. So let's go to the website and go to the scan engine. I have, this one is called 001 low RSI. And if I edit that scan, you can see that it's actually very simple. On the first line, what I'm basically doing is I'm defining my universe. I'm going to pick stocks that are inside the S&P 1500. So the S&P 500 for large caps, 400 for mid caps, and 600 for small caps. Then we also want stocks that have a decent daily volume. So we're looking for stocks of which the 20-day moving average of a volume is above 40,000. That gives us a bit of a lower threshold in terms of turnover. And then the actual rules of what I'm looking for are quite simple. I'm looking at the RSI over 9 periods. That's my personal favorite. I feel that the 14-day favorite, which is the classical version that Wiles Wilder used when he introduced RSI, over the years I started using 9 days, but feel free to change that to anything you like. We want that 9-day RSI to be below 30. And we also want that same 9-day RSI, but now 9 days ago, to be lower, or today's value, the current value, to be higher than the 9-day RSI of 9 days ago. And now 9 days and 9 days is a bit of a coincidence. You could change this to, I don't know, 8, 7, 6, 5, 4, 3, whatever you like. Let's stick in the 9 that I have there. And obviously then you get run the scan. So you run the scan, and here you are. There are 8 matching results, 8 symbols that fulfill that criteria. Now, you can do 2 things. You can actually store this in a new chart list, and let's just keep it at this name, what the system gives it. And then when you have that list, you can view that list as an RRG. And here you have the results of my scan on an RRG. Now remind you, the scan is using daily data, and we're looking here at a weekly RRG. So to be fair, let's move that to a daily RRG, and we use the S&P 500 as the benchmark. Update it, and here's your result. And interpreting it really, really quickly, I see two stocks that have my interest. It's CARA and HAE. Now, one thing that I want to show you, and it's very great because we've launched ACP, and one of the great things that I find about ACP and that I use a lot is that you can actually look at your scans, and let me run it again here. I can run it, it's the same scan code. I can run it in ACP and I can use it in ChartSchool. And obviously, I don't want a screen like this. I want a screen that has only one chart. Like that. And I have a chart style that has daily plus RSI. That's what we're looking for. And if I just tick one of these boxes, here's my chart. So when I look at this, I say CARA and HAE. CARA, this is a stock that's had a pretty massive drop. So am I really interested? I'm not sure, but you can now play around with the chart and see, and now you can see that it's resting at support, potentially interesting. And HAE was the other one, similar massive sell-off. I told you this is what we're looking for, and see if we can find it on a relative basis. It's improving. Am I happy with this? Maybe not. Drop below support, but there is a good trading opportunity there back towards resistance. But that's not the whole idea of this show. What I wanted to show you is how you can put that scan engine to use, plot it on an RRG, and use the outcome of the RRG on your charts. So let's go to the second version of my scan. This is one that I've written about a few times, and I talked about it in my show, Sector Spotlight. And it's a thing that I've been following for quite some while. And it is a strategy that was written by Linda Reschke and Larry Connors many, many years ago. And it's called the turtle soup. Sounds funny. There's a funny story behind it. And I'm not going to go over the whole strategy. That would take up too much time, and it's beyond the scope of this video. But if you look at an article that I wrote in the RRG blog, which is titled Combining the Relative Rotation Graphs and the Turtle Soup Setup, and I'll show that article in a minute, then you know what the strategy is and you know what we'll be looking for. The code blocks, the code elements that we're going to use in this scan, and this is much more complicated than the previous one. So we had a simple one on RSI. This is a little bit more complicated. What we're going to use here is a mix of N days low, N days ago, so something that happened a number of days ago. And we're going to look for minimums, minimum of N day lows. So let's take a look at that article that I talked about. The title is Combining Relative Rotation Graphs and the Turtle Soup Setup. What it does is what I explained to you in the beginning. What I'm looking for is to merge trend following and trend ending. And the turtle soup setup is really a trend ending strategy. It's looking for reversals. The rules here are described in the article. What we're looking for is a 20-day low with the previous 20-day low at least 4 bars earlier, or a little bit less than 20 days. And that's a visually very easy thing to do. We're looking for a 20-day low that dips below the previous 20-day low. But we need to find that. We need to, when we look at the chart, that's fairly easy to eyeball. But if you want to go over all the charts in the S&P 500, that's becoming a lot more difficult. And that's why the scan engine, that's where the scan engine is going to come in very, very handy. The scan code actually is in the article, so if you go there, you can actually copy it and to put it on your own system. But I'm gonna bring it on the screen here, and it's the Turtle Soup by S&P 500. If we go to the top of that scan, the group is the S&P 500, basically to just limit the scope and make sure that we're using tradable stocks. Now, here is the whole code. That's pretty big. Let me try to take this in slowly, and it's a video, so you can go back and forth and you can look at the code and you can figure it out for yourself. But what we're looking for here is the 4 days, so the low of 4 days ago, so the 4 days ago low, that's the low of 4 days ago, equals the minimum, so the lowest low over the last 20 days of yesterday, of 1 day ago. So 4 days ago, we had a 20-day low. If that is true, then this comes out as true. And if that's true, then we also want the lowest low over the last 3 days of 1 day ago. And the reason why it's 1 day ago is because today is always true. So you need to jump back one period in time to make this work. The lowest low over the last 3 days of 1 day ago needs to be higher than the lowest low over the last 20 days. And we're going to go over all these bars. And if you look properly at the code, you see that it adds up. So this goes to 4 days ago, 5 days ago, 6 days ago, 7 days ago. And this one here jumps to 3 days ago, 4 days ago, 5 days ago, 6 days ago. Because it's not always that it is 4 or 5 days ago. It could be this bar here, it could be that bar here. So we need to count back from 4 days to 20 days. I hope I'm making myself clear, and I'm so glad that this is a video and that there is a written article about it, so you can go back and figure it out for yourself and see how you can understand the concept of the scan code. But this code is tested and I use it every day. The results are good. And at the end of the code, you see 2 lines, 35 and 37, where there is a comment. That's on purpose. When there is a double slash, that line is ignored. You'll see that it is grayed out. And when this line that is now uncommented, it is looking for stocks that set a 20-day low today. So that's real time. You can then use the last intraday update. If you uncomment these lines and you use this line and you use it at the last market close, then you are scanning after yesterday's closes are in. Now, if you read the article, you will find out that that's not a real-time setup, but it gives me sort of a watch list, a warning list of stocks that are very close, within 1%, and again, you can change this, of their 20-day low, potentially entering a turtle soup setup. Now again, if I run this scan, here are my results. So there's 4 results at yesterday's close. And again, I store them in a new chart list. Here's my chart list, and I view it as an RRG. And here I can see, and now it's getting interesting, I have stocks that are hitting or close to a trend-ending characteristic according to the turtle soup strategy. And I've got the RRG that shows you the relative trends. And HUM definitely looks interesting. This is weekly. We can also check it quickly on the daily. And now you see it's a little less, but that L brands is still in leading. It's losing a little bit of strength. And again, you can go to the ACP, close these results. I can use my turtle soup buy. Now I need to do one thing. I need to save this scan, otherwise it would give me different results. And if I run this scan now, you will see the same charts. You give and I have actually, I like to use a 6-month daily chart with the price labels. And you can see that yesterday was very close to a 20-day low that was here. It never got hit. And I like this feature where, and this was actually, this was executed yesterday. This dropped below its 20-day low and rallied, and it's now still higher. So this actually executed pretty nicely. This is the second strategy. This is the one that I probably use most on scan. So I'm scanning for the turtle soup, throwing it at an RRG, and then looking at it at a chart to see whether I get a proper entry signal. Let's go to the third and final use for my scans, and that is finding members of groups. Because you know that relative rotation graphs are all about universes, about putting a number of stocks, a number of securities together in a universe and compare them against the benchmark and against each other. Now, you could obviously find all these universes and punch them in by hand. There is a number of predefined universes on the RRG page. But you know, sometimes you want to do a little bit out of the box things or dive a little bit deeper. And the scan engine can actually be very, very helpful to fill these universes. And the parts of the scan engine that we're using are the two blocks that are in the predefined scan components at the bottom right, indexes and ETFs, and sectors and industries. Then on my dashboard, I like to go to the sector summary. If you hit the sector summary, and you may or may not be aware of it, but this is the RRG symbol. This is the RRG icon. So let's go to the technology sector fund. If we click on the RRG icon for the technology sector fund, you will get the breakdown in industries. These are the Dow Jones industries. And technology at the moment is not the strongest sector, and you can see a lot of it is moving to the bottom left. But against the S&P 500, this group, computer services, is actually doing pretty good. And we could actually change this to the technology sector, and you'll see a similar picture. So I'm now interested in the computer services index, and especially the members inside that computer services index. Now let's go to the scan engine. Go to the scan engine, I said. So here's scans. And I'm going to do a new scan. I'm going to move this away. And I'm going to look for computer services, which is in the technology sector. Oh, oops. Here's the technology sector. Here you see the Dow Jones industries that were on that RRG. And I'm going to select computer services. So this scan here, oh, I need to, obviously you need to add it. There it is. And if I now run this scan, this is a very simple scan. This scan is now going to give me all the stocks that are a member of the group computer services. That's 74 stocks. Now that's a problem for me because the maximum of plots on the RRG is 50. It's hard-coded to 50 stocks on one RRG. But I also see that this includes small cap stocks, mid cap stocks, unclassified stocks. So I now want to fine-tune this list to include only the computer services stocks that are inside the S&P 500. So I'm going to add the requirement that the stock is a member of the S&P 500. So the group is computer services and the group is the S&P 500. Run the scan. You got 13 matches. You should know the drill by now. You store this in a new chart list. And this is actually a chart list that you could save for later use, that you don't have to do the scan every time. So I'm going to call this computer services. Save it. And now it's in my list. And every time I'm interested in computer services stocks, I can go in this list and I can look at it as an RRG and see that there are actually, like, so at first glance, VRSN and DXC are stocks that I really like. And then you can go and plot them normally on ChartSchool as well, VRSN, look at it, and then, wow, this is pretty cool. It's pushing against an all-time high. Relative strength seems to be turning around. RRG lines are doing well. Nice pick. Or DXC, that's the other one. Yeah, came out of a long decline, starting to do better, running into some sort of resistance here, close to breaking out, relative strength turning around. So with this scan, I found two names very, very quickly, from a scan to the RRG, to my chart, and potentially into my portfolio. These were the 3 ways that I wanted to share with you how I use scans to fill my RRGs. Hopefully you've enjoyed this presentation, you've learned something new, and you can take this into your own workflow and adapt the scans that I'm using to better fit your trading style. I'm very available. Here are the handles on my screen. And I would like to thank you for watching and see you again soon at some other instructional videos here at the ChartSchool.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.